Ladies and gentlemen, good day and welcome to the Q4 FY23 earnings conference call of Ratnamani Metals and Tubes Limited, hosted by Monarch Networth Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sahil Sanghvi from Monarch Networth Capital. Thank you, and over to you.
Yeah, thank you, Yashashi. Good evening to all. On behalf of Monarch Networth Capital, we welcome you all for the Ratnamani Metals Q earnings call. We are delighted to host the management of Ratnamani today, and from their side, we have the carbon steel business head, Mr. Manoj Sanghvi, and CFO, Mr. Vimal Katta. So without taking any much time, I will hand over the call to Mr. Manoj Sanghvi for the opening remarks. Thank you, and over to you, sir.
Yeah, thank you, Sahil. Good afternoon to all the participants. I welcome you all to this call and hope everyone is doing good. Our results for Q4 and full year of FY23 have been uploaded on the exchange, and I believe you all had the opportunity to go through the same. If you see on standalone basis, our company clocked its best ever performance in FY23 with the top line and profitability at historic highs, both crossing 4,400 and 500 crores respectively. The operating margins were broadly in line of our guidance provided last year, albeit a bit towards the higher side of the band due to the product mix and stable input pricing. As you all know, past few months prices of steel have been broadly stable, resulting into resurgence of stalled projects, leading to good demand across all segments in the previous year. The expansion across sectors has surged mainly in refineries, process industry, and core sector, which may augur well for the infrastructure demand, and more traction may be expected in demand of both CS and SS pipes across the globe. However, the order visibility in oil and gas transmission lines looks muted in India vis-a-vis water, but the business traction in the other segments and SS pipes and tubes continues to remain quite encouraging. Now I would like to straight away touch upon the quarterly financial numbers and business update in brief, and then we can have questions from your side. Our operating revenue has increased 47% year on year and up by 36% on sequential basis, mainly attributable to higher dispatches during the quarter. For the full year, our revenue growth has been 39% with EBITDA of 793 crores and margin expansion of 130 basis points. Profitability has been around 300 crores at operating level for the quarter compared to rupees 200 crores during the Q3 of FY23. This is mainly because of the product mix, better utilization, and operating efficiency. We are projecting the top line of 5,000 crores plus minus 5%, and the margins expected to remain in line as that of current year, with the variation of 2% here and there. The present macros look conducive for maintaining our long-term growth and margin prospects. So as we begin this financial year, our orders on hand as on 1st April was roughly 2,600 crores. Further, I would like to brief on few major developments. I wish to inform that we had successfully commissioned a captive solar project of 15 megawatts in the month of March, and we expect the same to result into further reduction of carbon emission, surely our power costs showcasing our orientation towards ESG and sustainability. Our capex in CS and SS are progressing well, now with some initial delays that happened due to land acquisition and longer lead time for machineries. During FY23, we have continued with our strategy to invest in more products and improving efficiency with focus on technology and infrastructure. Our well-calculated and judicious capital allocation in CapEx and all investment resulting in very sound balance sheet to lead to the next level. Now, regarding our subsidiary Ravi Technoforge Private Limited, which has clocked a total revenue of 245 crores with EBITDA margins of 10.8% and net profit of 4.5 crores for FY23. The CapEx has been underway for capacity and process expansion, automation, cost reduction, captive renewable power, and same is expected to be completed by the end of September-October 23. We are projecting the top line growth of 15 to 20% with margin expansion of 200 basis points for FY24. That's all from my side at the moment. Now, if there are any questions, I will be happy to answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Noel Vaz from Union Mutual Fund. Please go ahead.
Hello, yes, can I go on?
So please use your handset.
Is it better now?
Yes, please go ahead.
Yes, I just had, so regarding the fourth quarter, what exactly were the sales for the quarter? And is this particular run rate, can it be sustained annualized for FY24? Yeah, that was the question.
I could not hear the first part of your question. Can you please repeat?
Yes. What are the sales volumes for the fourth quarter, and can the number be annualized for FY24? Thank you.
Yeah, so the total revenue for first quarter was approximately 1450 crores. And yes, we have the capacity to do it, but sustainable over long run, quarter to quarter basis, it is very difficult since we are in a project-based business. So we might see 1500 crores in one quarter, another quarter can be 1000 crores, again it can go to 1500. But yes, say 1000 plus crores is what is our target. With one quarter going to 1500, 1600 crores.
I would like to answer one thing. Total volumes in Q4 were close to 106,000 tons for all our products. And as Manojji has shared, see, in our case, margins are totally dependent on nature of product mix, timing. So many factors are there. It is very difficult to say if a performance in a particular quarter can be extrapolated because we are in product business, order-driven activity. So we always say between 16 to 18% is the range at EBITDA level, which seems to be sustainable over a longer period. Plus minus 1% here and there may happen in a particular reporting period. And that should be there going forward also.
Okay. Yes. Thank you. That is all from me.
Thank you. We have our next question from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yes, sir. Can you give the volumes for FY23 and what would be the capacity utilization on this blended capacity utilization?
See, total, we did close to 304,000 tons for both the products during FY23.
Mm-hmm.
And on capacity utilization, the Manojji will share. Because see, in our case, for stainless steel seamless, it would have been optimum. Stainless steel welded would have been close to 60-65%. Newer capacity in stainless steel seamless would be closer to 35%. And on carbon steel, ERW has been optimum, helicosa has been optimum, LSAW process wise, older capacity has been optimum. And newer capacity will be maybe around 30-35% sort of thing.
So I will add there, segment to segment it will vary, but most of the segments other than newly added capacity, utilization was between 60 and 80%. Only stainless steel extrusion and also both were close to 30% utilization.
You said that SS seamless is 35 and SS welded is 100.
No. SS seamless is optimum cold finishing. Okay. Optimum means close to 80-90% sort of thing. Welded, cold finishing will be around 8,000-9,000 tons sort of thing. Yeah, and welded is maybe around 60-65% sort of thing. Newer capacity has been roughly maybe around 30% only for hot extrusion. Yeah.
Okay, so SS hot is 30% only.
Yeah.
So basically on that 20,000 ton capacity that you added in FY23,
yeah,
the capacity utilization is 30%.
Yeah.
And SS seamless, which is your cold, is full capacity.
Yeah.
Okay, so basically in the 48,000 ton, we would have SS seamless of 8, SS welded of 20, and SS hot of 20.
See, SS, whatever we produced from our seamless, some part has gone for cold finishing also, captive uses. So, if you look at the sellable capacity, that will be little lower because whatever captively we are using, that will become part of the overall capacity only. Yeah, it will not be available for sale.
Okay. Is it possible to share in this 304,000 tons how much is SS?
Earlier we used to share, but since last few quarters, we have taken a conscious call not to share certain info. Yeah. Okay. So separately we can discuss. Yeah.
No problem.
Okay.
What is the progress on the capacity expansion that you had planned about 180 crores in SS and another 170 crore in carbon steel?
Yes, so stainless steel expansion of cold finishing facility will be over by December of this calendar year or maximum January of next calendar year. For carbon steel, land acquisition and development has already started, and we expect that to happen in first quarter of next financial year.
Okay. And my last question is, sir, there is this anti-dumping which has come on hollow pipe, SS hollow pipe. So how, and also SS pipe, I think the anti-dumping, the duties have been increased. So how does it benefit us in terms of the capacity utilization? If you could share that. And the industry at large.
Yes, so anti-dumping on stainless steel seamless pipe had come somewhere in November, December of last year. And since then we have seen demand increasing, but a lot of it being imported in India was re-exported. So there are two. So that demand or there the anti-dumping does not play any major role. It is still being imported. But yes, some demand increase is being seen because of this anti-dumping.
Okay, and do we have are we 100% backward integrated on hollow pipe?
Yes, we have our own mother hollows, but not from melt to finish at the moment.
Not from?
Not from right from melting, then casting
that's okay.
Yeah, so we buy
so you basically must be buying a bar, right, and you make your own hollow pipe.
Yes.
A fillet, and you must be making your own hollow pipe.
Yes.
Okay. Thank you. I'll come back with you.
Thank you. We have our next question from the line of Poojan Shah from Congruence Advisors. Please go ahead.
Yeah, hi sir. On a previous con call, we have seen a hydro demand on that part. So currently wanted to know on that part as well, what are the situation currently we are facing from the hydro side and how we are looking at the industry front for that.
Hydro.
Yeah. Hydro. I'm talking of hydrogen. Hydro power plants.
Hydropower plants, no major demand. For hydrogen, still very nascent to comment what kind of pipe will be used and whether stainless steel, carbon steel. In the process, maybe stainless steel for transmission, maybe carbon steel. That we will come to know once going forward, because a lot of research for the steel is also going on, and in the process whether it can be welded, seamless. So those research are still going on.
Okay. And sir, our expectation is that we are speaking about 5,000 crores top line in next financial year. Currently, we are at around 4,500. So, and we have grown around 43% for this financial year. So, why we are eyeing, like, are we being conservative or we are seeing some subdued demand in any sector specific?
So, two reasons. See, the kind of growth we had for the last financial year, it's like one of a kind, because the projects were there, demands were there, capacity came in at the same time, so we could capitalize on that. But yes, in this financial year, we see some drop in carbon steel line pipes demand, which still, because of better utilization of other products, we will be able to maintain 10% growth rate.
Okay, got it. Thank you so much.
Thank you. We have our next question from the line of Kunal Shah from Carnelian Capital. Please go ahead.
Hi, congratulations in the first place for a fantastic set of numbers, sir. I just wanted to understand the volume growth guidance and the general demand scenario, right? Also at the same time wanting to understand that we talked about 106,000 ton approximately.
I'm sorry, sir. You are not very clear.
This is better now?
Please use your handset mode.
It's echoing.
Is it better now?
Can you speak, please?
Yeah, is it better now?
Sir, are you able to hear him?
Yeah, I can hear him, but there's echo on the sound.
Sir, I hope this is better now. A few questions from my side. In the first place, congratulations for such fantastic set of numbers. I wanted to get a sense on the volume growth for the next year, and also, we did about 106,000 tons the execution in the current quarter in comparison to about 67,000 in the previous quarter. So wanting to understand what led to this superb execution in the current quarter, and also if you could help understand volume growth guidance for the next year.
So as commented previously and in my opening remarks, the volume growth, like we finished this year at 4,400 and close to 4,450 crores. Next year, our expectation is, or what we have budgeted is close to 5,000 crores. That can be a plus minus 5%. And to answer your second question, which is what led to such numbers in the quarter. So the utilization for all the segments and all the products during the last quarter was at its optimum, which led to this number. So if there's demand and for all the products, all the segments, then yes, this number is achievable. And I've in my previous call, I've already said that we have capacity today to reach a turnover of 6,000 crores.
Got it. And also, we have this enabling resolution that we have taken for about 500 odd crores. So you would want to light, how should one look at that?
See, basically it is an enabling resolution. So because we are working on our next growth plan also. So if required, we may go for tying up the debt. And in case of debt, as you know, now regulations require a portion of debt has to be raised through bonds and other instruments. So it is an enabling regulation. Right now, nothing has been planned as far as capex is concerned, but team is working on that. So just it will save time, nothing else. Yeah.
Got it. And just wanted to understand on this bearings. I've got about 104 crores revenues in the current year coming from Ravi, right? So when you say 5,000, how should one look at the bearings business in this 5,000?
5,000 is on standalone basis. So whatever the 300 crores we are targeting for Ravi is additional. So on consolidated basis, we can have a number of 5,300 crores with a plus minus of 5%.
Got it. Just one last question from my side. On the general demand scenario, if you would share how is the water projects going on, the CGD projects going on, and you did mention certain slowdown.
Mr.
Hello.
Concall Shah is dropped from the queue, sir. We'll go on to the next question from the line of Radha from BNK Securities. Please go ahead.
Hi, sir. Congratulations on good performance. So, my first question was that, 2 years back, we had this seamless stainless steel capacity of 8,000. Now that is 28,000. So at that point of time, 2 years back, via hot extrusion, the capacity was 6,500. So now that the stainless steel seamless capacity at 28,000, so what is the hot extrusion capacity?
8,000 was cold finishing capacity, and today the hot extrusion capacity is 20,000 tons for the new press, and the old press is 6,500 tons.
10,000 total.
10,000.
Yeah. So hot extrusion is 30,000 tons, and cold finishing is right now close to 10,000 tons.
Okay, and so what will it be in the next 1 or 2 years?
See, a marginal increase in cold finishing will be there because we are setting up a facility for higher value added products, which will become operational by year end. But overall capacity in stainless steel seamless will continue to remain at 30,000 tons, combined together with hot finish and cold finish, because whatever we are going to produce through hot finish, part of it is going to be used captively, which will be cold finish. So sellable capacity will be 30,000 tons of seamless, 20,000 tons of welding. So total 50,000 tons of capacity.
Okay, sir. And so next question is in stainless steel. So company is planning to do this coil tubing business. So just wanted to understand, for this business, will this be in a separate manufacturing line or in the same line? And also with regards to this, also wanted to understand what is the product about, how is the market size, and what is the scope of business and competitors in this business?
I don't know where you have this information from of coil tubing, but the project is under implementation, and that data we would not like to divulge at the moment.
Okay, sir. So thirdly, this Ravi Technoforge in FY22, we did a revenue of 280 crores. Now in the second half of FY23, revenue is 104 crores. So if we extrapolate, it comes to around 200 crores for full year. So is there a degrowth in this business in FY23?
Yes, FY23, so first 7 months, they clocked the revenue of 130 crores. And last 5 months our acquiring the stake, they did a revenue of 105 crores. So this year, yes, there has been degrowth. One, during the first 7 months, they had some financial stress, so they could not actually utilize the capacity and convert the demand into orders. And second, because of slowdown in because of the war in Europe, there is a little slowdown from European manufacturers, which led to this degrowth. But going forward, we see that the demand has started coming back, and this year we will be able to clock close to 300 crores.
And sir, what about the debt in this business? I think in FY23 we have around 75 crores of total debt. So how do you see this in the coming years?
Every year, I think there is a repayment of between 15 to 20 crores, which has happened in last year.
Okay, sir. And so lastly, this in ETSO carbon steel, this mobile manufacturing mobile plant of 60,000 tons, around 60,000 tons. So that plant is it fully depreciated?
That plant, Kataji, I don't know, depreciation fully. No, I think there would be something left. It would not be fully depreciated. Kataji is still.
Okay, sir. And sir, lastly, what is the capex guidance for next 2 years?
Next 2 years, we are working on a lot of things. At the moment, still on the drawing board. So maybe in another 6 months, we will be able to throw some light on that.
Okay, sir. Okay, that's it. Thank you so much.
Thank you.
Thank you. We have a next question from the line of Riya Mehta from Equitas Capital. Please go ahead.
Hello. Thank you for giving me an opportunity and congratulations for a good set of results. My first question would be based on hello. Yeah.
Yes.
What good order book levels of both stainless steel and carbon steel. So I would want to know where this is coming from exactly, almost, and which sectors and segments.
For the last quarter.
Yes, order book for the last quarter, I think 2,400.
No, can you please repeat your question?
I'll answer. See, mainly the orders are coming from oil and gas sector and process industry for stainless steel, and certain orders from power sector also, and plus other miscellaneous are there. Okay, and in case of carbon steel, it is a mix of oil and gas sector and water.
Okay. And my next question is in regards to margins. So what worked in favor for us this quarter?
See, one thing is we got the benefit of economies of scale because the production dispatches both were higher. Second thing, product mix also means higher value added products volumes were also higher, and in carbon steel also major orders were related to oil and gas sector where margins are typically better. So everything worked in favor of better margins.
Okay. And actually I missed out. Could you tell me the capacity utilization again, if you don't mind?
60 to 80%. Go ahead.
Manoj, please.
So, see, most of the segments, stainless steel welded, stainless steel seamless, carbon steel ERW, spiral, also the induction bends and coating. It is all the products, the utilization is between 60 to 80%, except for two capacity expansion, like one hot extrusion for stainless steel seamless what we did, and another capacity expansion in carbon steel was LSAW pipes. So these two were on 30% utilization. Utilization being the first year of actual commercial production, and rest all were between 60 to 80%.
Right. And in terms of the pipeline of orders, what is the kind of pipeline are we seeing for the next year coming forward?
We started this year with 2,600 crores. We've been booking orders for stainless steel, seamless, welded, across industries, and for carbon steel LSAW pipes. However, some softness is seen in the CGD segment and the line pipe segment. So, but we are hopeful, the line pipes, spiral line pipes, oil and gas segment. But we are hopeful, we are seeing good demand in the water segment. So we are hopeful we'll cover up on the water segment.
Okay. Thank you. That's it from my side. Thank you so much.
Thank you. We have our next question from the line of Dhananjay Bakrodia from ASK. Please go ahead.
Hi, sir. Just wanted to understand increase in margins. Maybe I missed this. Is it increase in margins because we had some contracts earlier and that's how we got the benefit of lower inventory? And B, which end user industry is seeing such strong volume growth, and do we see that sustainably grow, let's say, next year and the following year after that?
So, part of it, yes, may be correct that you have some orders which are of the start of last financial year when the war had started, commodity prices were skyrocketed, and you got some orders. But most of, as you know, and as we always say, like most of our orders are on back-to-back basis. So we have maybe 10% benefit we would have derived from such total orders. Out of total orders, 10%, but not a major part because of the commodity prices.
So then, sir, this margin is sustainable because our GM and operating margin is sustainable now. Let's say
sustainable margin is between 16 to 18% because see, last year if you see, if I break down the product mix industry-wise, more we did for oil and gas, right? But it is not going to remain same year on year. Maybe this year it might change that oil and gas might go down a little and water is added. So if water is added, the margins might, but still we keep our focus on to maintain, to stay between that 16 to 18%, 15 to 18%.
So then just following up with your question, what is the difference in margin between oil and gas and water?
Normally, oil and gas is a little more value added than water, maybe 1 or 2% more. But it totally depends on demand and supply.
Okay, fine. And 1 second, which margin? Okay, sure. Thank you.
Thank you. We have a next question from the line of Vikas Singh from Phillip Capital. Please go ahead.
Good evening, sir, and congratulations on very good set of numbers.
Thank you.
Sir, I want to understand, since we are guiding for almost double of the top line versus our current order book, but we are at the same time telling that the oil and gas segment demand is a bit slow. So are we expecting incremental demand to come from water segment or exports, or because CS segment is the one which drives our top line? So just wanted a little bit clarity on the thing.
Yes. So see, if we started the order book at 2,600 crores, so we are already having, say, 6 months backlog if I consider 5,000 crores of revenue. So, and we are seeing few water projects, specifically if I talk about carbon steel, we are seeing few water projects which we will in the first or second quarter, which will be dispatched in third and fourth quarter. So, to answer your question, yes, 1,000 crores is very much possible considering you are already having orders of 2,600 crores.
So domestic water segment is where we think that the traction would be there going forward.
There is demand for domestic water segment. There is demand for international water segment also. Few projects we are under discussion.
Understood, sir. So second question pertains to SS segment, export orders. Basically, after many quarters, I have seen that our export order book in SS has been on higher. So is it a short-term phenomena you see, or do you see that this kind of the trend would be sustainable and a lot of order can be exported from India in SS segment especially?
Going forward in stainless steel, yes, this kind of export is sustainable. More and more end customers are accepting our product, and once we've seen repeated orders. So we don't see any, until unless there is anti-dumping or anything, we don't see any reason for this to go down.
And because basically traditionally also we have been getting almost 50% of turnover in stainless steel from physical exports direct, and around 20% from indirect exports. So that way stainless steel, in stainless steel products we are already there in a reasonable way in international market. So and with the increased capacity, our focus is going to be both on import substitution and international market also.
Understood, sir. Sir, just one last question on the capex. So at least can you tell us the FY24 capex targets which you considering current plans?
Maybe 100, 150, 200 might be there. But see, something for the next growth plan will also be happening by the time we close the year. So major outgo will not be happening for that. So safely we can say 150, 200 might be the range. Yeah.
So we already had 350 crore kind of the capex plan which was announced at the start of the year
No,
for
but
the new addition.
But
out of which
for Odisha project, it will take some time. Yeah.
Okay, so as of now, how much we have spent on that 180 crore of SS cold rolling facility and this Odisha project? How much we have spent on these individual projects?
Odisha project will not be very significant. Some amount for lease rent and other things have been paid. So major outgo will be happening for land. Land will be anyway, lease rent only will be going. Capex will take some time. Some civil activities may be starting. Am I right, Manojji?
Yes, capex will take some time. Maybe we will see something starting from the second quarter of this year.
So
and in stainless steel, we might have spent 60, maybe around 60, 70 crores sort of thing. Major outgo will be happening once these deliveries of critical plant machinery will start. Yeah.
So this year again, meanwhile, we see our cash balance going up, right? Because this money would be getting accumulated.
Yeah. And we, as I have shared now, there are plans to continue this growth beyond FY25 also. So something other than whatever we have planned, that may also be planned, and we like to start working on that opportunity also. Yeah.
Very well, sir. What is our net cash balance as of now?
See, net cash keeps on fluctuating. So as on 31st March, we on net side we were close to 20 crores plus. Today it might be again 20-30 crores plus or minus. Yeah. Because total long-term debt will be maybe around 140 CR sort of thing.
Okay, that would be our peak net debt level, 140.
Net, yeah. Because there are no short-term borrowing. Only long-term borrowings of roughly 140 CR are there as on date. Yeah.
Okay. Thank you, sir, for answering question and all the best.
Thank you.
Thank you. We have a next question from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yeah, good evening, sir. So I have a question on, our stainless steel manufacturing, the hollow pipe process. So is there some difference between the hot extrusion process, and a cold drawing or a pilger process? Is the process that we follow, is it superior to the other, processes?
Hot extrusion, pilgering, drawing, those are all different processes. Hot extrusion is hot extruded material is input for the pilger mill. But yes, there is a similar process to hot extrusion, which is piercing, and piercing is normally used for carbon steel seamless pipes. Whereas China adopted a technology of using it for stainless steel pipes, and then the Indian manufacturers also started. So yes, there is a vast difference because one is used for carbon steel, another is used for stainless steel. The product which comes out is also different.
Sure. So there are certain high-end applications where probably that product is not accepted. Is that the case?
Yeah, if you see, for example, Saudi Aramco specification, they don't accept pierced material. Or if you see, for example, Reliance's specification, they don't accept the pierced material. So there is a reason a lot of study has gone in. There are various papers available online also, which explains the difference between both. But there are some industry where criticality is not so much, and they are okay to use pierced.
Sure, sir. Okay. And also just on, on the question on exports, so what was our proportion of exports in total revenues and in, in the order book?
20%. Total exports close to 20%.
And order book also, current order book of 2,500 crores mostly.
And order book, I don't have the breakup of exports.
I'll just share. I'll just share. Just 1 minute. Huh?
Yes, sure, sir.
Out of these as on 1st May, we were having close to 557 crores of export orders out of 2,440 crores of total order book.
Okay, sir. Sure. Yeah, thank you, sir. That's it from my end.
Thank you.
Thank you. We have our next question from the line of Aman Thadani from Solidarity Investment Managers. Please go ahead.
Thank you, sir, for taking my question. Sir, my first question is, one of our peers has recently entered the ERW space. So I just want to understand that what sort of margin does a new player make in this space and the overall opportunity in this space?
What sort of margins in this space is difficult to say at the moment. Because, see, the last 3 years, 4 years, our ERW was running at, say, almost 90% capacity utilization. But this year, I feel that there is, the demand is not as high as it was. So, and with a new player coming in, of course, he will take some time for approvals and everything. But margin is again difficult to say but it varies from 12% to say 16-18%, depending on number of projects available in the market. See what has happened. CGD demand has also gone down a little.
And sir, how much time will it take for a newer guy to ramp up? How many years does it take?
For a new company to ramp up, 12 to 18 months.
Okay. And sir, my second question is, sir, since SS is a key business for Ratnamani, so what is it about this product or this segment that a lot of players have just not got it right?
Time. The amount of time what we've given, right from 83, 84 and slowly consistently growing, that is the only thing I would say which is different.
Time in terms of what? Is it in terms of is it in terms of the complexity that is there in like to understand that complexity, or is it in terms of like something that
it is a different mindset of business, I would say. It is not like a normal tube pipe business. Carbon steel is totally different if I compare with stainless steel.
okay? And sir, even if someone is able to get the product right, even to maybe bid for the projects, what are the criteria that one player would need?
It's more about the competition rather than Ratnamani here.
Okay.
I don't know what you want to hear, want to understand from me answering this.
And sir, just one general question, sir. In the past, we have guided for 15 to 17% long-term margin band, but this quarter we are seeing that going ahead it would be more of a 16 to 18% range. So, sir, what has changed?
The product mix, because as I have told you, the carbon steel demand oil and gas is subdued. So likely from that 5,000 crores, more will be stainless steel, more will be value-added products in carbon steel. So that's why it is 16 to 18%. But at the start of the year, this is our guidance. It can be between 15 to 18% also going forward. If few water projects are booked at a little low margin, it can be 15 to 18% also.
That is it from my side, sir. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We have our next question from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, hi sir. Congrats on good numbers. Firstly, this cold finishing capacity will go to what level after this expansion gets completed?
This new capacity expansion is of 1,200 metric tons to start with, and it will go up to 1,500 metric tons.
1,500 tons, so your capacity will go to only 11,500?
Yes. The capacity expansion is small in terms of tonnage, but this is for a small diameter tube. So in terms of meters, it would be quite substantial.
Okay.
And
yeah.
Please go ahead.
Yeah. So, and secondly, we had obviously talked about development of multiple grades of product with this new seamless hot extrusion capacity. So where are we in that process? In last 1 year, have we developed multiple products, and that is going to drive the growth in export market going ahead? Some color on that. How should we look at export SS business over next 2-3 years?
Yes. So the extrusion, what we had expected to do in the first year, we could achieve better than that. 30% utilization with development of grades which we did not expect in the first year itself. So going forward, yes, the utilization will be better, and this year we are targeting between 50 to 60% utilization.
50 to 60% utilization level.
Yeah.
Okay. So, and SS, even the hot extrusion will be higher margin business, like 20% plus.
Some grades, yes. Some grades lower. So a blended, if I put together, it will be same, close to 15 to 18%.
Okay, and the SS also is the same, hot extrusion.
Yeah, because you see lower end grades where it is more like commodity, there the margins are also not so great. But for high end grades or difficult products, the margins are good. So blended we always, because we cannot only do high end grades or we cannot do only be at the low end of the product. So both blended we see the capacity utilization also and margins also.
Okay. And like we used to highlight earlier in the Concall, can you highlight like what kind of bidding that we done, the tonnage and all in oil and gas, water and all is up now?
Those details I haven't prepared this time. Maybe in the next call, which we plan after 6 months for the semi-annual results, we'll have more details on what we are bidding.
Okay, but can you highlight some projects which are like say the activity going on right now?
Oil and gas, if we see right now for bidding, what we have is one project of Gas Authority of India Limited, which is KKBMPL Phase 2, which is Kochi, Kuttanad, Bangalore pipeline project, Phase 2. So that is under bidding. Then a few projects of IOCL are under bidding. Few in the east for IGGL, which is Indra Dhanush Gas Grid Limited, is under bidding. One project for Vedanta is under bidding, and one or two projects for GIGL. GIGL is a subsidiary of GSPL group. So there are a few projects in oil and gas which are under bidding. For water, we have few projects in Gujarat for Surat Municipal Corporation, for Ahmedabad Urban Development Authority, then Avani Yojana. So in Gujarat we have some water projects, and we have some water projects in Africa which we are bidding.
Yeah. Africa. You said Africa.
Hello.
So you said Africa.
Yeah.
I think 2018-19 we done some Tanzania, right? Is it similar kind of project?
Yeah, was I didn't copy.
I'm saying that I think in 2018-19 we had done some project in Tanzania, I guess. Is it like similar kind
we had earlier. Now this is for Mozambique or Kenya. I'm exactly not sure what place, but it is for Africa.
Okay. So that's.
Of course, last year also we had exported some quantities to Africa. The carbon steel is purely opportunity-driven business in case of export. So whenever we get the opportunity, our team books the orders also, and that execution happens.
Okay. And on the SS side, how are the orders or maybe inquiries from chemical, pharma, and all? Is it also strong or it is softened basically? Fertilizer also was one.
So if we see the growth, the driving things in this year is stainless steel and some products in carbon steel, which will help us actually because the line pipes will remain flattish kind of growth. But yes, stainless steel will grow, some products in carbon steel will grow, which will help us reach 5,000.
Okay, so is it coming from this chemicals and pharma and all, fertilizer? Or this is new area?
Yeah, it is coming from various industries, pharma, chemicals, fertilizers, food and dairy, sugar, automobile. Of course, oil and gas still remains the highest.
Okay, thank you. That's all from my side.
Thank you. We have a next question from the line of Hiren Kumar Thakurlal Desai, an individual investor. Please go ahead.
Yeah, sir. So I have two questions. One is on the export side. So as you mentioned, this year the visibility seems to be a little bit muted. Do we have a medium-term thinking in terms of increasing the export share so that this little bit of cyclicality can be sort of mitigated?
Yes, we have our focus on exports. Our LSAW plant has just started, so it is slowly getting approved in various countries, various geographies. So our focus is there on exports, but this is a project-based business. So if there is a project, yes, and definitely then if it is within our reach, reach meaning if there's no anti-dumping in that country or in-country value to be provided, definitely for the projects we are there.
Okay. Do we target some percentage medium term, or we can't really say something like that?
Very difficult. One project can change the total dynamics, like 30% export, and then if you don't get that project, it is maybe 10. Carbon steel, it is difficult to say. It is because it's not like many projects you are supplying to and small quantum. It is one project which is 500 crores, 600 crores, or 700 crores. So the whole dynamics on the export percentage changes.
Okay. The second question, no, I think my second question has been answered. Yeah, that's all from me. Thank you.
Okay, thank you.
Thank you. We have our next question from the line of Riya Mehta from Equitas Capital. Please go ahead.
Hello. Thank you for giving me the opportunity for a follow-up question. My question was in regards to, since we are seeing that water segment is seeing some good traction. Apart from water, where do we see the demand coming in from? If we are seeing lower demand for oil and gas, and considering that the realizations will also drop for the next year given the lower commodity prices, where do we see then confidence for the revenue visibility?
Okay, so as I answered the previous question, see, oil and gas line pipes is low, but oil and gas process pipes is still on the higher side, both for stainless steel and carbon steel. So that is one sector where we see the growth. Then stainless steel utilization of capacities in extrusion and some better utilization in aerosol, we will get that.
Okay. Okay, thank you so much.
Thank you.
Thank you. We have our next question from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
So just two follow-ups. One, what is the utilization that you would expect in the expanded hot finish SS, which was at 30% you mentioned in FY23? This, how much will you scale up to?
50 to 60%.
50 to 60%. And my second question is, sir, on this expansion of SS, which you mentioned will add 1,500 tons via that 170, 180 crore of capex, and it's a low diameter but substantial length. Is it the auto tubes basically?
No.
These are not auto tubes.
No.
Then any reason why for 180 crore it's just 1,500 tons, or if you could tell us what will be the asset ton on this 180 crore?
1:1 or maybe a little less.
So what is this product actually?
This is very high value-added product. No.
Sorry?
Stainless steel cold finished tube.
And what is the dia size? Is it less than half inch or 1 inch?
Less than
3 mm. Yeah, beginning from 3 mm. Yeah.
3 mm? Okay. And used where?
Onwards, yeah.
And it's not auto tube, right?
No. These are used in defense also, in nuclear power plants also. Number of applications are there.
Okay, done, sir. Thank you very much.
Thank you. We have our next question from the line of Aman Thadani from Solidarity Investment Managers. Please go ahead.
Sir, I have just one follow-up question. Sir, since you said that the CGD sector is seeing some pressure, so I just wanted, can you throw some more color on it?
Color meaning?
So why is it under pressure since the entire sector is at such a nascent stage?
Yeah, so what happened because of the war in Europe, the gas prices escalated quite a bit. So, and the government where CGD was a priority sector for gas, in between changed that sector and they were not given APM. APM is a subsidized gas which the government would allocate to the CGD companies also. So, and then they had to buy in the spot market. So the risk associated was quite high. So they are going slow. Not that so they are going slow at the moment with the capital investment.
Okay, so it's just a temporary issue. Not the long-term story stays intact, right?
Yes, it seems to be a temporary issue.
Thank you, sir.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Sahil Sanghvi for closing comments. Over to you.
Yeah, I just want to thank the management for patiently answering all the questions, and on behalf of Monarch Network, I would also like to thank all the participants. Manoj sir, would you like to give any closing comments?
Yeah, thank you, Sahil. Thank you, Monarch. Thank you, all the participants. And sorry to be not answering some questions. We want to answer, but then the situation demands that whatever delay, we as a group have decided not to divulge a few information, but it is not that we want to hide something. It is for the better for the competition to catch up. So with this, thank you everyone, and sorry once again.
Thank you. On behalf of Monarch Network Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.